Hi there, welcome once again to the Dukascopy TV studio. I'm Ben Jones. Jean-Francois Owczarczak joined us once again in the studio to share his insight. Jean-Francois, thank you very much for joining us again.
Thank you for having me back.
Not a problem. Now, this week it looks like it's going to be very central bank focused. We have the Fed meeting and we also have later in the week the ECB meeting. So should we go straight in and look at Euro US dollar?
Sure. Okay, well, I'm just back from holidays and I must say I came into the office this morning and not much has changed. The levels are pretty much where they were 2 weeks back. And so let's go into the different pairs. This is our standard Dukascopy mosaic. We have Euro US dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures and 3 months 30-year Treasury futures. So let's go into Euro first. And as this chart presents what we call an investor's view, it's our longer term view. It is a combination of a weekly chart, a daily chart, and an hourly chart. And the point here is to get an at-a-glance view of how the trends interplay. So you can see the weekly is still in an uptrend, the daily is in a downtrend, and the hourly is in a downtrend. So theoretically, we're in a potential consolidation period in an uptrend. Now, if we go into the charts, we go into the weekly. The weekly was only in what we call a correction up. That means it was never able to create a robust, long-standing, impulsive move, which here on a very long-term chart on the weekly. And it did make it up to its corrective targets around 140, but it really needed to go about 140, above 140.20 to create anything more meaningful. So this correction up has fulfilled its objectives, and as we see, is probably starting to roll over. And that we could already see or sense that on the shorter-term charts, i.e. the medium-term daily and the short-term hourly. So let's go into the daily. So the daily is an impulsive move down. It still has some time to go, and it still has some price potential into it. It could lead us down into a zone between 132.70 and 130.70. So there's possibly 1.5 to 3.5 more figures to go. And as you see, there's quite a lot of exaggeration at the moment. I mean, the two envelopes are at stress, and our oscillator is in the oversold situation. So following this initial move, breaking through our corrective targets, making it to impulsive territory, now in a bit of exaggeration, we could expect a temporary correction, a rebound. It's having problems materializing, and let's have a look at it on the short-term charts. And so let's go on to the hourly. Well, the hourly, the envelopes have flattened out. We see multiple points of stress where the two envelopes touch each other, which gradually help turn the trend. We could see a strong exaggeration here in the oscillator, well in the oversold, came out of it, but at the end of the day, at the moment, we're still in a downtrend. So we're still heading lower. The bit of consolidation we had last week was very, very shallow. And so at the moment, we don't see a sign of this a temporary correction up. So it's still in a resumed downtrend at the moment. And still has a bit of potential to the downside over the next week or so.
Okay, is it similar for the cable as well?
Let's have a look at cable. So also an investor's view. So the weekly is still heading up, but did reach quite a large exaggeration point here, with the two envelopes touching each other, as well as an oscillator well in the overbought, turning around, and had also reached the lower end of its impulsive targets. So some exhaustion there, and that exhaustion, with a lot of exaggeration on the daily, ended up in the correction that we currently see. Now, it's not an impulsive move yet, and to create a stronger move down, a long-lasting move down, it would need to go below its corrective targets. That means it would need to move below 166. So at the moment, we're still about a figure away. Also, we could see this as a strong support area. And as we have just reached the targets of this a corrective zone, and we're entering it into a time-wise perspective, it could be a good place to put in a tentative play to the upside. Now, it's only support are there to be broken, so beware. 166 and below would mean that we're going impulsive and that it may there may be more to the downside in this move. Now the hourly also still heading down, quite in a lot of exaggeration, slowly getting into its impulsive 2 targets, which are quite aggressive targets. There's still a bit of time left, but in terms of price potential, we're getting pretty much there. So also, maybe not this week, but towards next week, some support coming in at these levels.
Okay, and in terms of gold and equities, what are we seeing here?
So gold is still stuck between 2 trends here. I mean, it's in a weekly long-term downtrend, which has been in effect since the early part of 2013. Turned impulsive early that spring, and now is seeing a consolidation up since December. A consolidation up which really never created anything substantial. And our trend is still heading down, still has a few more quarters to go, and still see some price potential to the downside. True, in quite a lot of exaggeration here in the oversold on our risk index, but in terms of market stress, the coordination is not quite there yet, and we can't talk of an exaggeration at the moment. So still heading down, and still some potential in time and price. Now the daily, this correction up has created an impulsive move up, mostly triggered by this point in March, which has yet to be confirmed. But we could see here is mostly a triangle at the moment, and it's having problems leaving this triangle either way. The risk index is pretty much in the middle of the range. The smaller envelope is pretty much in the middle of the larger one, so no market stress there at the moment. And maybe the hourly is leading us back to the downside. As you can see, it's a better signal. It's an impulsive down. We just had a very high risk index here with only what was only a correction. So that's often a sign of risk rising faster than prices. Often what we see in corrective moves instead of impulsive moves. And so here, probably a resumed downtrend, and still some targets in time. So if we look at it all together, a bit of a discrepancy here, but in the perspective of a long-term downtrend, would still be negative on gold at the moment. Then maybe the S&P and equities. Last time we were here, we were seeing quite a nice correction. We still, as we still are, still heading up on the long term, still with some tentative impulsive 2 targets above 2,000, up to 2,200. Quite a lot of exaggeration here on the risk index, market stress, meaning the 2 envelopes are touching each other. All this means that it's quite an overvalued situations in terms of risk, in terms of market stress, and in terms of the targets being almost fulfilled. Now it's not over yet, it hasn't turned yet, but it is an expensive overvalued situation. Now the daily has pretty much reached what it should reach at this stage. I mean, market stress, risk index being in the overbought, the impulsive targets have been done, an initial correction, we back in an uptrend with the end of the envelope slightly up, but it's still a quite a risk. The risk reward is not quite there. I mean, there's targets are done. We're still quite very high. I believe this consolidation will continue. We haven't broken down yet. It's still an uptrend, but it is expensive, and at the moment, a very strong resume uptrend over the next few months will maybe materialize, but it's not in the chart yet. And finally, the hourlies. The hourlies had this initial correction down, reached the oversold territory, had some market stress, well coordinated, reacted up, and just went through. Just went above the corrective targets. So now we have the perspective over the next 2 weeks to probably make it up to our 2,000 level. And so over the short term, over the next couple of weeks, probably a retest of the tops that we saw in July.
Jean-Francois, thank you very much for joining us again.
Thanks for having me.
And thank you for watching. Jean-Francois will be back next week, but until then, make sure you keep clicking back to Dukascopy TV as we bring you plenty more updates and exclusive interviews. Bye for now.